triangles, price gets squeezed tighter, like a balloon getting ready to pop. You'll see them as symmetrical. Equal pressure can break either way. Ascending, buyers gaining strength, often breaks up. Or descending, sellers gaining control, often breaks down. All types indicate a big move is coming. Here's what it looks like. Price was bouncing inside this triangle, squeezing tighter and tighter. See how it then broke out sharply to the upside? That big jump is your signal for action. Flags and pennants, quick breathers, form after a sharp, fast price move, the pole. A small rectangle flag or a tiny triangle pennant forms as a brief consolidation. After this quick break, price typically continues its sharp original move. Watch this one. Price just had a huge sprint upwards, the pole. Then it took this small rectangular flag break. After that short pause, it exploded higher again. That continuation is what we look for. Rectangles or channels. Price bounces sideways between two parallel support and resistance lines. This horizontal movement can be a pause before breaking out to continue the prior trend, or a range until it reverses. See this in action. Here, price was stuck bouncing perfectly between these two lines, forming a rectangle. Once it finally broke above the top line, it continued its move upwards with force. This breakout confirms the direction. Head and shoulders and inverse. Trend flip forms with three peaks or troughs, a central head higher than two shoulders. Signals potential trend exhaustion. The inverse head and shoulders is upside down. A break of the neckline confirms the reversal. Example, see how price made a left shoulder, then a higher head, then a right shoulder. Once it broke below this neckline, the support line under the shoulders, the uptrend was over and price went down significantly. That neckline break is your trigger. The inverse head and shoulders is just the opposite, signaling a reversal from a downtrend to an uptrend. Double and triple tops or bottoms. Multiple tries, then fail. Price attempts to break a key level, resistance or support, 2 or 3 times but fails. A double top or triple top forms when price hits resistance multiple times, then reverses down. A double bottom or triple bottom forms when price hits support multiple times, then reverses up. Breaking the middle neckline confirms the reversal. For example here, price tried to break above this resistance line once, failed, tried again, failed, then plummeted. That second failure at the top, followed by breaking the middle support neckline, is a strong sell signal. A triple top shows a third rejection. Double and triple bottoms are the exact reverse, signaling an uptrend. Wedges. Squeeze and burst. Price moves in a narrowing channel where both trend lines point in the same direction, signaling exhaustion. A rising wedge upward squeeze often reverses down. A falling wedge upward squeeze often reverses up. Here we see rising wedge. Price was slowly climbing in this rising wedge, getting squeezed tighter. But instead of continuing up, it suddenly broke down below the bottom trend line. That's your signal for a potential sell. A falling wedge is the exact opposite, with price falling in a narrowing pattern before typically bursting upwards. ABCD pattern. The building block. This is the fundamental 4-point structure. Price moves from A to B, retraces to C, then extends to D. It's often seen as a continuation, but is a core part of more complex harmonic patterns. Let's check it. See the clear leg from A to B, then the smaller retracement to C, and finally the extension to D? This simple rhythm is a common sight in the market's flow. Gartley Pattern. The perfect reversal. A common 5-point reversal pattern, say BCD, resembling an M or W shape. It uses precise Fibonacci ratios. A completed Gartley often signals a reversal at the D point. Here's a Gartley. Notice the distinct M shape in an uptrend or W in a downtrend. When price reaches that final D point, precisely aligning with Fibonacci levels, it often makes a sharp reversal. Bat pattern. Deeper reversals. Similar to a Gartley, the bat pattern is another 5-point X, A, B, C, D reversal structure. Its key difference is a deeper retracement at the B leg and often a shorter projection at D, still based on Fibonacci ratios. See this bat? You'll spot this M or W shape too, but notice how the B leg retraces a bit deeper than a Gartley. When it completes at D, it's another high probability zone for a trend reversal. Crab pattern, extreme reversals. Another 5-point XABCD harmonic reversal pattern known for its extreme D-point projection, often the longest of all harmonic patterns. It indicates a potential sharp reversal after a very extended move based on Fibonacci ratios. Observe this crab. It also forms an M or W, but the D-point here is exceptionally extended, making it one of the deepest retracements or extensions among harmonic patterns. When price reaches this extreme D-point, a powerful reversal is often imminent. Butterfly pattern. Extended reversals. A 5-point XABCD reversal pattern similar to Gartley and Bat, but characterized by an extended D-point projection, often beyond the X level. It uses precise Fibonacci ratios. See this butterfly. It resembles an M or W shape, but notice how the final D-point extends significantly past the initial X point. This extended move, confirmed by Fibonacci levels, often signals a strong reversal. Rounding top or rounding bottom, saucer. Slow turns. These patterns show a very gradual reversal, where price slowly curves upward, bottom or downward top, like a saucer. Observe this rounding bottom. The price slowly and smoothly curved downwards, then just as smoothly started curving back up. This indicates a long-term shift from selling to buying pressure. Diamond top or diamond bottom. Rare sparkle. A complex reversal pattern that forms a diamond shape as price swings expand, then contract. Spot this diamond top. You'll see price swings getting wider, then narrower, forming a diamond. This is a powerful, though less common signal that the trend is about to reverse sharply, often downwards from a top. Cup and handle. Brewing up a breakout. A bullish continuation pattern. It looks like a U shape, the cup followed by a small downward sloping consolidation, the handle. Watch this cup and handle, see the smooth rounded cup form, then this small handle dip. When price breaks above the top of that handle, it often leads to a strong upward surge, continuing the prior uptrend. Gaps. Price jumps. These are empty spaces on the chart where trading didn't occur, caused by sudden strong buying or selling. See these gaps. Breakaway gap happens as price explodes out of a pattern, starting a new trend. A runaway gap shows strong momentum in the middle of a trend. An exhaustion gap appears near the end of a trend, signaling it's running out of steam before a reversal. Ready for more market adventures? Like this video and subscribe to the Lizard Academy for more essential insights.